So in the first video, I give you a complete overview of the trading strategy that I use to approach the financial markets, right? And the first step is to generate perspective, get a worldview, and understand what's happening across the globe. And I mean, the reason we do this is because we want to have a predisposition as to whether or not we're bullish or we're bearish the financial markets, right? And the way to do that is to understand what's going on with GDP. So first things first, when I refer to GDP, I'm talking about real GDP. And we look at real GDP across the largest economies. We'll look at the US, Europe and China. These three economies make up more than 50% of world GDP. So it's guaranteed, I shouldn't say that word. If these guys are growing, we're going to see growth globally, specifically within the financial markets. So we get this predisposition before we drill down into industry and into stock specifics. And in order to kind of understand or anticipate where we think there's going to be growth, we need to look at the leading economic indicators. So there's three types. You've got leading economic indicators, which is what we're interested in. We want to anticipate where things are going and trade accordingly. There's coincidence indicators, so these are things that tell you the current state of any economy. So obvious one would be the non-farm payrolls that come out first Friday of the month in the US. That just gives you a snapshot of where the US economy is right now in terms of employment. And then you've got your lagging indicators, which funnily enough is GDP. GDP is reported quarterly, so it's actually telling you what has happened, over the last 3 months. What we're interested in is leading economic indicators to anticipate which way GDP is going to go. And once we have that, we've got a predisposition, then we're set. We can start drilling down into industry and stocks. So if you look at an economy in its simplest form, it's made up of businesses and consumers, right? So a business can be broken down into two types. Manufacturing, so guys that create a tangible product, so machinery, for example, a tractor, or food production. That's your manufacturing companies. And then you've got the service side. So service is a bigger contributor than manufacturing to GDP growth because it's just more businesses in that field. So service sector, you're looking at things like healthcare and financial services, just to give you a couple of examples, and that covers business, right? So if we can get an idea of where we think these businesses are going, that's the first step. The other aspect is consumers to an economy. So consumers actually drive economic growth because it's consumer spending that leads to corporate earnings, right? If people are spending money, if people are confident about their current situation, their job prospects, the state of an economy as a whole, they're happy to spend money. Whereas if we look back at the most recent financial crisis, people were losing jobs, there was a lot of uncertainty. People aren't going to be as willing to go out and spend money on things that they don't necessarily need. They'll have much more tendency to save, for example, and make sure the essentials are in place. So it's really consumer spending that encourages growth. And so we need to keep an eye on that. That's it in a nutshell, right? What are businesses doing? What are consumers doing? I mean, there's other areas to the equation, so your imports, your exports, investment. But these three things are the fundamentals that drive, okay? The leading economic indicators that we can monitor to anticipate where we think there's going to be growth. And so the actual specific leading indicators we'll look at, I'm going to focus on the US. So the ISM report on businesses. The PMI reports are essentially a survey of procurement managers and top executives that are experts within their industry, and to the point where they'll make the investment decisions and the strategic decisions of inventory levels, for example. So these guys get surveyed on a monthly basis, okay? And thousands of them are surveyed, and the PMI report basically takes these opinions and sentiment, it scores them, and gives you a number that you can use to basically gauge whether or not we can expect growth in GDP. It actually gives you, it goes as far as giving you and doing the analysis for you where GDP is relative to the PMI number, okay, based on historical performance. So there's a very strong correlation between the PMI number and where GDP goes in the future. So we take that number to help gauge where we think things are going to go in the manufacturing sector. The ISM also reports on service sectors, so there's 2 reports come out at the start of each month, and yeah, I can't urge you enough to go through these reports. Really read them. There's qualitative statements and opinions, nuggets of gold sometimes, that are very good for generating trading ideas within specific industries. But at this stage, all I want to cover is using the PMI reports to gauge where business sentiment is, and it's a leading economic indicator. Then the other thing that we look at is consumer surveys. Alright, so consumers make up the largest part of growth in an economy, and the University of Michigan Consumer Sentiment Report is hands down the best for America to look at and gauge consumer sentiment, and it follows a similar process where it surveys thousands of everyday people and gauges where they think, you know, how much savings they're going to have in the future, what their outlook is, how comfortable they are spending, and it quantifies this survey and gives you a number so that you can gauge where sentiment is to you know, relative to where it's been, and you can use that to kind of really gauge if, you know, if sentiment's positive or negative. So they're the 3 main indicators that we look at. Another one we'll cover is building permits, because building permits is it's a juicy little indicator that actually gives you an insight into the liquidity of an economy as a whole. So a quick rundown on that. I mean, we'll jump into the computer in a second and go through some of these reports, but the building permits report, what it actually does is, in order to get a permit, a construction company has to want to build, right? And a construction company, for starts, isn't going to build, let's say, a new block of flats if they don't anticipate demand for it, okay? So for starts, it kind of gauges where we are in terms of overall kind of sentiment, because people aren't going to be buying houses if they've, you know, for starts, can't afford it. So then there needs to be demand there, and that's gauged by construction. But what it actually does is construction companies use the bank to leverage the purchase, right? They're not going to pay for a construction project with cash out their pocket. They're going to go to the bank and they're going to request a loan, justify why, you know, it's worthwhile constructing this project, and it's what they'll do is that tells you, you know, whether or not the banks are willing to lend, because you only apply for a permit once you're in a position to really kind of build out and go ahead with the construction. So it gives you an insight into whether or not banks or startups are lending, and whether or not you've got positive sentiment in terms of people prepared to buy houses, first time buyers and whatnot. So that's something we also keep an eye on. And what we'll do now is we'll jump into the computer and I'll walk you through some of these reports, where you can find them and what to take away from them. Okay. So welcome to the inside of my computer. I'm going to show you the ISM reports as well as the consumer sentiment, okay, and how to find them. Now, if you jump onto the Trading FM website, you can find it in Google. What I've done is consolidated all of the leading economic indicators for each economy that we're going to look at, okay? So we'll jump into the United States, and if we look at the ISM report on business manufacturing, we can see here, just looking at 2 years worth of data, that the ISM numbers have been very strong, indicating that there's good, strong economic growth within the manufacturing sector. We've also got the service PMI, consumer sentiment, and building permits. But let's look at the actual data source itself. Okay, so you can find this. All you need to do is Google ISM report on business and you'll find it. But I've consolidated all the data for you, and the data source is also available here. So this is your main page, right? We've got the most recent manufacturing, the most recent service PMI. I'm going to go ahead and jump into the manufacturing. So this is, we're looking at February right now, and we can see here that PMI numbers of 57. We've seen growth in new orders, production, and employment. Now, what I want you to do is you're gonna have to get comfortable reading through these reports. Don't be daunted by the size of them, okay, because you can take snippets from it. You can go through these reports very, very quickly. And what it does is it paints a very nice picture for you, a very clear picture as to what the current state of affairs are and whether or not we can expect growth in GDP. So we can see here, this second paragraph in, of the 18 manufacturing industries across the States, 17 are reporting growth in February. It goes ahead and ranks which industries are growing the most. Now these are the qualitative statements I was talking about, okay, so these are the highlights of some of the surveys. Let's just read through some of these. So yeah, alright, so this is computer and electronic products. Very positive outlook for this quarter. Production goals have been adjusted multiple times, increased each time due to demand. So, I mean, straight off the bat, I'm going to be looking at stocks within this industry here, computer and electronics. Okay, let's see what else we've got. And this is nice. This is always nice to read. So, demand still outstrips capacity. Competitors have announced heavy capital investment to increase capacity. That's your food and beverage manufacturing. Okay, another very positive statement there, and that's an industry worth exploring. And what we'll do is, if we look at the reports, we'll go down. You can see that the PMI is broken down into multiple different areas. Okay, you can drill down in your own time into each of these, but this PMI number, the base number, is what you want to keep an eye on to get an overall perspective. And let's just look at the economic summary. So before I told you that PMI has got a very strong correlation to growth in real GDP, and you can see here, here's another qualitative statement that basically says, based on the past relationship between PMI and the overall economy, it indicates that for January through to February corresponds to a 4.3% increase in real GDP. So 4.3% is very healthy, very healthy. And for me, I mean, that's a very bullish sentiment around the manufacturing sector. I would then drill down, I'd look at the service sector as well. Usually these two paint a very similar picture. That comes out once a month, just as I've said before, at the start of each month. The next step is to look at your consumers to see what the sentiment is like. So just again, looking at a 2-year snapshot, we can see the sentiment is high relative to where it's been, and we've seen a huge boost in consumer confidence. Let's drill down into this report. So this gives you a snapshot of consumer sentiment. Okay, there's 3 reports. You've got the index of consumer sentiment, which is the one we're interested in. But yeah, it's also worthwhile looking at consumer expectations, okay, because we're always looking forward, and this I suppose sometimes can precede the index of consumer sentiment, because it's all about where people think things are going. But this is both a leading economic indicator, and what we do is basically gauge where it is at to where it has been. So to drill down and get some more data, you can flick through the website and pull it back. Okay, just jump back onto the site here though. This gives you a snapshot of the last 2 years. And finally, you've got building permits. So each one of these indicators has a brief, a small description, alright, and then a link to the data source. We're not going to drill down to this because this is just raw numbers, but you can see here that this is just the data available. You can find it online. Keep an eye on it every month. Stay on top of your leading economic indicators, and it helps paint a picture. So that's the US there. That's a snapshot of US, and from what we've just seen, I mean, it's been very quick, very easy to kind of overview this. I have got a bullish predisposition on the US economy based on this data that I've seen. Okay, we've got positive manufacturing and service PMI data, as well as positive consumer sentiment. Now what you can actually do is you can drill down into Europe, into China as well. Slightly different data sources. Okay, you don't get the qualitative statements you do with the US ISM reports, but you're getting the numbers, and what you can do is you're basically gauging you're gauging where we're at relative to where we've been. The final thing I'll do, just to confirm my bullish or bearish predisposition, is look at the actual benchmark index for a particular country. Okay, so we're looking at the US in our previous examples. jump onto Yahoo Finance. It's an amazing source for financial data. Okay, it's all free. So what to do is we'll look at the benchmark indexes and we'll just gauge where price is relative to its all-time highs. Okay, if it's above 20%, if it was within that 20% margin, alright, we're in a bullish market. If it's below, we can say we're in a bearish market. So this is just further confirmation. Let's just jump into market data, world indices, and I want to look at the S&P 500. Okay, so let's look at 10 years worth of data, just gauging where price is relative to where it's been. I mean, it's very obvious that the price is at all-time highs. So I mean, this for me is just final confirmation that we are very much in a bullish market. Okay, and should we have been around about here, okay, then what I would simply do is measure the price here, so 2079, to the price here at 1932. I would gauge how much of a percentage pullback in the index that is, and I mean that just looks like a bit of a retracement. So if that retracement was in excess of 20%, then I would consider it a bear market, and I'm sure the PMI reports would paint a very similar picture. Okay, but that's a final step, and I do this with each market. So we do this with the United States, Europe, and China. I also look at UK just because I look at UK stocks, but I do that to gauge whether or not I'm bullish or bearish in each economy. Okay, and from there the next step is to drill down into industry and get some perspective. Okay, just to review, what we've discussed is we've basically went over why we care about GDP, and as I've said, it's to get that predisposition of whether we're bullish or bearish a particular market. We look at the leading economic indicators, so you're going to want to look at the manufacturing and service PMIs for each of those countries. You're also going to look at the consumer sentiment reports, all of which is available on the Trading FM website under Market Fundamentals. I then drill down into the ISM reports for the qualitative statements to actually help me generate trading ideas for particular industries. Also look at where a benchmark index is relative to its all-time high. Okay, so that's the process to generating a world view. There's a lot of information there. Okay, so I recommend watching the video again just to really let it soak in. And that's it. If you haven't already, subscribe to the YouTube channel and sign up to the Trading FM website to access this data.